Insurance is a must for everything. Definition of insurance law. In order to understand insurance law, it is useful to understand insurance first. Insurance is a contract in which one party pays money, and the other party promises to reimburse the first for certain types of losses if they occur. Insurance law falls into three major categories. First, the insurance company will hire lawyers to represent the insured in case she is sued for something related to her insurance contract. These are known as insurance defense attorneys. For example, an automobile insurance company will hire an attorney to represent an insured driver when she gets sued for causing another driver's injuries. The second category of insurance law helps insured people determine when an insurance company must pay a claim. Third, insurance companies typically hire attorneys to make sure the company complies with all applicable laws and regulations, which can vary by state. There are many types of insurance. The government runs some kinds of insurance, like Social Security disability, workers' compensation, and unemployment insurance. However, the term insurance law usually refers to the law surrounding private insurance. The most common types of private insurance are health insurance, automobile liability insurance, homeowners insurance, life insurance, title insurance, and malpractice insurance. Auto insurance. Choose coverage to meet your needs. Loss of use coverage while your vehicle is being repaired due to damage covered under your policy. Flexible premium payment options. What is auto insurance? Understand your car insurance and what it covers. Basic personal auto insurance is mandated by most states and provides you with some financial protection in case of an accident. But is it enough? What are the options? Learn how car insurance works and what types of coverage are available. Understanding auto insurance, the basics. Auto insurance is a contract between you and the insurance company that protects you against financial loss in the event of an accident or theft. In exchange for your paying a premium, the insurance company agrees to pay your losses as outlined in your policy. Auto insurance provides coverage for property, such as damage to or theft of your car; liability, your legal responsibility to others for bodily injury or property damage; medical, the cost of treating injuries, rehabilitation, and sometimes lost wages and funeral expenses. Basic personal auto insurance is mandated by most U.S. states, and laws vary. Auto insurance coverages are priced individually to let you customize coverage amounts to suit your exact needs and budget. Policies are generally issued for 6-month or 1-year timeframes and are renewable. The insurance company sends a notice when it's time to renew the policy and pay your premium. Home insurance. Coverage that's right for you. Contents coverage when you move. $7,000 in jewelry coverage. Key replacement coverage if your keys are lost or stolen. Who needs home insurance? While home insurance isn't legally required in the same way as car insurance, it's still important and helpful in protecting your home. There are policies designed for all types of occupants, including homeowners. If you own your home outright, or are currently paying off a mortgage, you'll be responsible for both the physical structure of your home and any belongings you have on the property. Renters. If you're a private tenant in a rental property, you'll only be responsible for your own belongings. You won't need to take out buildings insurance, as that will be up to your landlord. Landlords. If you own a property and you're renting it out, you'll be legally responsible for the property's condition, but will only need to cover the building and contents you provide. Students. If you're living in student accommodation, usually with other students, you might be covered by a parent or guardian's home insurance policy, but this isn't always the case. Flat sharers. If you're sharing a house or flat with other adults, details about door locks and access points can affect premiums, as shared households come with certain higher risks. Holiday homeowners. If you own a holiday home that is otherwise unoccupied, you will likely need to take out specialized home insurance for properties that are empty for long periods of time. 24/7 claims. The support you need should the unexpected happen will be here every step of the way. You can report your claim day or night directly to one of our friendly and professional representatives. Help and support. Service at your fingertips. 24/7 emergency claims service. Manage your auto policy online or access online chat. FAQs. Find answers to commonly asked questions. Auto insurance. Driving without auto insurance is against the law in almost every state. Not only is it illegal to drive without coverage, but it could significantly cost you if you get in an accident, especially if you're at fault. Fortunately, several types of car insurance can pay for vehicle damage and injuries after an accident. Liability coverage. This type of car insurance pays for property damage and injuries you cause to others if you're at fault for an accident. Liability car insurance also pays for your legal defense and judgments or settlements if you're sued because of a car accident. States require a minimum level of liability insurance to drive legally. Uninsured, underinsured motorist coverage. If an uninsured or underinsured driver strikes your vehicle, this coverage pays for you and your passenger's medical expenses. Uninsured motorist coverage can also pay for lost wages and compensate for pain and suffering. Some states require coverage, and in some states coverage can also cover your car damage from the uninsured, underinsured driver. Home insurance. Unlike auto insurance, no state law stipulates that you must have homeowners coverage. However, if you financed your home, your lender will usually require coverage to protect their interest in your property. This way, if your home is damaged or destroyed, you have funds to rebuild and won't walk away from your mortgage. Even if you don't have a mortgage and paid for your home outright, you're responsible for repairs or replacement costs if something damages or destroys your home and you don't have home insurance. It's wise to buy a home insurance policy. Home insurance policies wrap up several types of coverage, including dwelling coverage. From your roof to your floors, dwelling coverage protects the structure of your house from unexpected events like fire, wind, theft, or vandalism. This type of coverage also pays to repair or replace structures attached to your property, such as a garage or deck. Your dwelling coverage amount should equal the cost of rebuilding your house. Personal property coverage. This type of coverage protects your personal belongings, such as furniture, appliances, and clothing. Problems covered include theft, fire, and explosions. Coverage for personal property is usually set at an amount between 50% and 70% of your dwelling coverage. You can usually buy more coverage if you need more. Renter's insurance. If you don't own a home, that doesn't mean you don't need insurance. Renter's insurance helps you replace your belongings such as electronics, furniture, and clothing if they're stolen or damaged. Problems covered include fire, tornadoes, explosions, and more. Without coverage, you would be responsible for replacing all of your stuff if your rental goes up in flames. While your landlord's insurance will cover damages to the structure of a rental, it doesn't cover tenant property. In some cases, landlords will require proof of coverage to rent a unit. Renter's insurance includes personal property coverage. This coverage reimburses you if your stuff is stolen or damaged by an issue like a fire. Liability coverage. If you're liable for someone else's injuries or property damages, this coverage can pay for the cost involved. For example, if someone falls in your apartment due to your negligence, liability insurance can pay for their medical bills. Additional living expenses coverage. If your rental is damaged or destroyed by a problem covered by the policy, making it uninhabitable, this coverage will pay for your extra costs while you can't live at home. Related, best renters insurance companies. Umbrella insurance. Auto, home, and renter's insurance come with liability coverage that protects you and your family's assets from lawsuits brought against you. But every policy has liability limits. If you have substantial assets, your homeowners, renters, or auto liability insurance may not be sufficient if you lose an expensive lawsuit. Umbrella insurance can provide additional liability insurance if the unexpected happens, and you're liable. For example, let's say someone sues you for $500,000 of medical bills after tripping on your sidewalk and injuring their back. If your home insurance liability limit only goes up to $300,000, you're responsible for the remaining $200,000. Umbrella insurance would cover this extra cost. Life insurance. If anyone depends on you financially, finding the best life insurance for your situation is essential. 44% of U.S. households would face financial hardship within 6 months if the primary wage earner died, and for 28%, it would be just 1 month, according to LIMRA, an industry-funded research firm. Life insurance is one way to replace your income if you die unexpectedly. Life insurance policies usually fall into 2 main buckets: term life insurance and permanent life insurance. Term life insurance. Term life insurance lets you lock in rates for a particular length of time, like 10, 15, 20, or 30 years. During this time, your premiums are level. Once the level term period ends, you can typically renew the policy on a yearly basis, but at a higher cost each time. If you want to cover a specific financial obligation, like the years of college or a debt, term life insurance may be a good fit for you. Term life insurance is usually the most affordable type of life insurance. Permanent life insurance. Permanent life insurance can provide lifelong coverage. In addition to the death benefit, permanent life insurance includes a cash value component. If the cash value builds, you can access the money by taking a loan or withdrawing funds. If you decide to end the policy, you can take the cash value of the policy. Consider permanent life insurance if you want to build cash value to supplement retirement savings or to provide a death benefit for someone who will rely on you financially for a long period. Permanent life insurance is more expensive than term life insurance. Types of permanent life insurance include whole life insurance, universal life insurance, variable life insurance, and burial life insurance. Related, best life insurance companies. Health insurance. Medical bills are one of the frequent causes of financial hardship in America, according to the American Public Health Association. Even if you're young and healthy, a stay in the hospital could cost you about $30,000 for 3 days, according to healthcare.gov. If you're uninsured, that could wreck your finances. You can usually get a health insurance plan through your employer. If your employer doesn't offer health insurance or if you're unemployed, you can shop for health insurance plans through the Federal Health Insurance Marketplace. Health insurance plans from the Federal Marketplace can provide subsidies if you meet income and eligibility requirements. Or you can buy health insurance by contacting health insurance companies directly or going through a health insurance agent or broker. If the monthly premiums seem unaffordable, look into costs for a high-deductible health plan. With this type of coverage, you must pay a higher deductible before coverage starts, but it will lower your monthly health insurance cost. In addition, you can combine a high-deductible insurance plan with a health savings account, so you can stash away tax-free dollars to pay for future medical costs. Typically, you can buy health insurance only during open enrollment periods specified by the health insurance companies selling them. Open enrollment for marketplace plans is usually from Nov. 1 to Dec. 15, though some states extend the deadline. Exceptions to the open enrollment period are allowed under certain circumstances if you've had a recent life-changing event, such as getting married or having a baby. Disability insurance. You might think you need disability insurance only if you have a job involving dangerous activities. But most disabilities aren't work-related. Arthritis, cancer, diabetes, and back pain are among the most significant causes of disabilities, according to the Council for Disabilities Awareness. That's why it's wise to consider disability insurance as part of your financial plan. If you become sick or disabled, leaving you unable to work, disability insurance supplements a portion of your income. It typically replaces 40% to 70% of your base income and usually has a waiting period before coverage kicks in and a cap on how much it pays out monthly. Aside from qualifying for Social Security disability benefits, there are 2 main ways to get disability insurance. Group disability insurance through work. Individual disability policies that you purchase on your own. Long-term care insurance. Adults turning age 65 have a 70% chance of needing long-term care at some point, according to the Department of Health and Human Services. Whether it's in-home assistance to help with everyday tasks, or an extended stay at a nursing home, most seniors will likely need assistance at some point in their lives. And long-term care isn't cheap. It costs an average of $9,000 per month to stay in a private room in a nursing home, according to Genworth, which sells life insurance and long-term care insurance. Long-term care insurance can help pay for expenses such as in-home care, adult daycare, or nursing home stays. The best time to buy long-term care insurance is when you're in your 50 seconds or 60 seconds. Buying coverage during this age range is usually the most cost-effective time to buy. As you age, the cost of LTC insurance will increase. Be sure to research this product thoroughly before you buy it. In recent years, policyholders have been surprised by large premium increases that have made the insurance unaffordable for many after they bought it. The Congressional Research Service has an overview of long-term care insurance. If you're buying life insurance, you may be able to add long-term care coverage to your policy as a life insurance rider or buy a policy that combines life insurance and LTC coverage.